Hey, it's Andreas, and let's talk about Oscar Properties. Now, this is a high risk company to invest in, and I will talk a bit about what's going on with this company and their transformation from a failing development company to a property management company. And this transformation is something that's not unheard of in the Swedish market. We've seen the clothing brand Wesk do a successful transformation from being a failing skating brand to a successful property management company. So this has been done before, and I believe that the experience within management of Oscar Properties is very usable in property management as well, coming from the development world. All right, let's take a look at some of the highlights and then go into a deeper look at the financial reports from the company. And I will show some very interesting numbers there as well. All right, so in terms of price to earnings ratio, we see that the company is trading at about 3 times earnings. This is well below the average in the Swedish market, which is 20. However, there is one accounting post that makes this a reality, and I will show this in the financial reports as well in later slides. When it comes to earnings, earnings are forecasted to grow by 25% a year. This is quite good, and they finally became profitable this year. I put a parenthesis around this because, as you will see in a later slide, cash flow is actually negative. All right, so in terms of risk, we see that earnings declined a lot on a historical basis, looking back, 5 years. However, as the company is currently undergoing a turnaround, I do not think that this is very applicable to doing an analysis of where the company is going today. So that side of the risk I'm disregarding. However, when it comes to interest payments being covered by earnings from the company, they are not very well covered. They had 100 million in interest payments for 2021, and we will see how this affects cash flow in a later slide. We can also see a lot of shareholder dilution actually over the past years. However, from 2020 to 2021, I will show this in the last slide, we saw actual numbers of outstanding shares go down a lot because the company did a 50-to-1 reverse split, meaning that if you had 50 old shares of Oscar Properties, you would now have one new share. And what this did in practice, what this means for investors is that it's no longer trading like a penny stock, basically. And we also have a large one-off post in the results here that very much affects total earnings, and they also have some non-core business posts affecting earnings, such as the sale of development rights in the Primus project. So those are some of the risks here. Moving on, all right, so this is revenue. If we take a look at revenue from renting out property, this is in hundreds, so this is in millions of Swedish kroner. So we can see here that the revenue from renting out property, I'm circling the post here with the mouse, is 215 million, all right? And if we take a look at the year 2020, this was only 16 million. So this represents the transformation that's happening in the company, as well as the second post here in this financials show that sales of goods and services went down from 133 million to 41 million. Remember, they're no longer developing and selling off projects, they're renting out properties. So this change here reflects that reality. And as you can see here in the midsection, there are now occurring costs for maintaining properties here from minus 8.8 million to 86 million now. And also here, costs of developing projects down, once again representing this change of the business. And then the very interesting part here with the total results from operation, we can see that they're finally profitable now with about 500 million in, earnings. All right, I say earnings, not cash flow. All right, because this second to last post here means change in value of properties in Swedish, right? And this means that in earnings, all right, the company added 537 million Swedish kroners as, an increase in the value of the properties that they hold on their balance sheet. This is not a realized gain. To explain it simply, let's say that you have a property worth 10 million today on your balance sheet. That's what your report the value is at. Well, now you report it as 12 million instead, and you have a increase in the value of property by 2 million in that case, right? So this is what happened here. This is a non-cash flow event. And as you can see, the total market cap here, I wrote it in Swedish, market cap is what this means. We see it's 1.5 billion. And then earnings here of 500 million shows the price to earning ratio of about 3. But what happens if we do not calculate this change in value of property as a part of the earnings? Well, we can do a cash flow analysis, and the company did this one because they're required to do so by law. And we can see here that once again, earnings here, the first post, 500 million Swedish kroners, and then they start deducting non-cash flow posts. And we see this change in value of properties. Remember, non-cash flow post, they subtract 537 millions, and then we also have paid interest here as a big post, 105 million, quite a lot in interest. We will see the total debt to equity ratio in the final slide. And there we see that the cash flow from operations and the change in capital used in financing, the operations here, is a negative 202 million Swedish kroners. All right, so a negative cash flow. And if we take a look at some other key figures here, I want to start off by showcasing the revenue here. As you can see, this is also in millions of Swedish kronor, by the way. But here in the glory days, where they were a successful development company, they had a lot of revenue. And then this declined year over year. And in 2020, there was talk of bankruptcy. And they did a transformation in terms of the core business to managing properties, renting them out rather than developing them. And we see that revenue is increasing again now. Is this a change of trend? Will revenue continue to increase and the results of the business improve over time? Well, only time can tell, right? But we also see here that earnings were positive back in the day, and then they went into the red, and now they're once again into positive territory. However, remember, as we went through, this is due to an accounting trick as well, with the value of properties being increased on the balance sheet. What about return on capital? This is important if you're a shareholder. This is, the return on equity here, this post. Used to be negative for a long time, and now if we calculate in everything, we see it's about 20% return on equity with the numbers that the company is reporting. This is very nice in my book. And we can also see total amount of equity here. The post that I'm circling with the mouse is, 2.5 billion Swedish kronor. And in terms of the total value of the balance sheet, this is 8 billion, right? And we can do a calculation here by dividing equity with the total value of the balance sheet, because remember the balance sheet is equity and debt, right? So we see that this gives something called solidity. We see this number being calculated for us here, 31%. And what this means in practice is that 31% of the value of the balance sheet is made up of equity, so the value of the shares, and then the other part is all debt. And this was one of the takeaways I wrote down here, as you can see on the bottom of this PowerPoint slide. I wrote company is leveraged and with high risk. And this swings both ways. High risk, high reward, right? If they are able to turn around the business, stave off those interest payments, increase revenues, transform into a successful property management company, then in terms of return on equity, this will have a big swing upwards and give great returns for shareholders. And in the same spirit, if return results worsen once again, well, then the company is once again in risk of bankruptcy. So we're standing at two splitting roads right now, a crossing, right? Either they are doing this business transformation successfully and we will see some very, very good returns, or things worsen and this time they might go into bankruptcy. Remember in 2020 in the media, there was a lot of talk about Oscar Properties risking bankruptcy. In terms of what actions I will be taking with regards to investments in this company, I bought 500 shares on my last paycheck, made a just a small investment from that paycheck, as I made a very, very big one from the one before that. And that puts my total in this company to 2,000 shares. I will increase that to 4,000, then I'm done. I'm looking to add 160 more shares in Palantir to have 1,000 shares in that company as well. And I'm also looking to add more shares in StoneCo as well. Anyways, those are just my actions. Whatever investments you decide to do, I hope you make a ton of money. Take care now. Bye bye.